As Donald Trump assumes charge as US president, the 47th US president, the real talk really that is taking place is how will Trump 2.0 and Donald Trump taking charge once again as the US president impact India's stock markets? To decode all of this, I'm joined by Nasser Salim, someone who tracks the markets very closely. Thank you for your time, Nasser. First, we have seen the Nifty and the Sensex decline over 1% in trade. We've seen volatility index hit a fresh 6-month high. So are investors being cautious on Trump's India stance?
Good afternoon, Sakshi. Thank you very much for having me on your show. It's always a pleasure. So, two, three key points, Sakshi. We've always been maintaining the fact that volatility will continue, especially in the first half of 2025 calendar year. This is no surprise because there is a lot of expectation. There's a lot of, one is expectation. The other one is on news flow and sentiments. Incidentally, or fortunately or unfortunately, market does work on sentiments as well, and that's a very, very important point. And what I'm trying to allude to is that we are very near the earnings season, and one is that there is a lot of what should I say, anticipation or expectation built around the earnings for Q3, for quarter three. And there are two houses of view. One is that it could be a little muted, better than quarter one and quarter two of 24-25 financial year. And the other is that, it could be much better, and therefore both those views brings in a sense of volatility, and both are contrarian to each other. So one could be the fact that because of that, there is volatility, and it continues to be so. Number two, I think today's the inaugural speech of Trump 2.0, as you rightly said, has had a lot of details and data, and he's trying to address the elephant in the room, and one of his core key addresses remains on tariffs, and more so tariffs on specific countries as of now. He's gone ahead and voiced that opinion. He's gone ahead and said about Mexico and Canada, and he's saying that certain import tariff bills can be introduced as on 1st of February 2025, as early as that, and that is also bringing in a lot of volatility, because one aspect is that one anticipated move was that he'll also use that same in that same breath, he'll also say it for China. But things have changed there in the last 96 hours, I would say. The fact that from saying that we will ban TikTok, as an example, to now saying that there is no ban on TikTok in the US, and over the next 75 days, we will not ban it until we come back with further news flow around that, has been, has given some breather. And therefore, the markets is worried. All emerging, if I look at India specifically, added to the fact that there is earnings expected, calls to be expected, and results to be expected in the next 2 weeks, within the next 2 to 3 weeks. This is also adding to a little bit of volatility to say that, can certain embargoes be hit? Can tariffs be hit? And obviously, India is in the IT space is a big input provider and services as far as IT is concerned to the US. And one of the thoughts that does come to one's mind is that can visas such as H-1B visa be impacted? So look, it's a mix of all of these. I think he's come out and said that he signed out some 100 plus executive orders on day one on 2.0. He's made some large announcements on environment, on protecting the borders. He's talked about regularization of or deregularization rather in energy, on tariffs, on cryptos. So he's alluded to some of those things very, very clearly, and I think the direction in which he's going out to say is that he wants to protect and protect the dollar as well, right? Because he feels that is something which will ensure that the US will tend to gain, because they are sitting at a huge $36 trillion debt as we speak, highest to World War II number, or record to the World War II number. So I think those are some of the factors which will continue to play out to increase volatility over the next few days. And until these executive orders get once they get signed, which he's signing, we believe they will get into legislation, and then from there we'll get into execution. I think this process will take a few weeks and days, and I think a lot of anticipated volatility will continue.
Right now, like you said, volatility will continue. Investors, of course, and a lot of others, really viewers, as well as a whole host of questions coming in. So the question really is that are investors then seeking more clarity on US policies, and therefore near-term volatility is a given?
Absolutely, Sakshi. I think if I can broadly say in layman terms that the capital markets does not like ambiguity, and this is a global phenomena, right? Anywhere the capital markets respects data, it likes earnings, it likes quality, uh, in terms of the output that comes out of our earnings. It likes clean businesses, and therefore it likes good, clean flow news. To allude to the point, to say that unless there is clarity and ambiguity gets cleared out over the next few days, as I said to you, those executive orders from right now, from a verbal announcements to execution, they are two separate things. What I see and we see is that there has been a 360-degree turn as far as China is concerned, for example. As far as Trump 2.0 is concerned, when he was elected Trump president, he said that he'll go all out on China. 96 hours, things have changed, right? We've also given to believe the fact that he's called up resources. The news flow tells us that from various publishing houses and media houses say that he's actually called up President China, Xi Jinping, and had a conversation with him to say that I might even visit China in the next 100 days. So look, again, investors are absolutely, right in their cautious stand. Cautious is recommended. It is something which one needs to look at from your own risk-adjusted perspective. One should not go on hearsay news. Please check facts, and all of this until doesn't get full clarity. It's always prudent to remain cautious.
Right now, it's prudent to remain cautious, but Trump 2.0 and global markets may seem to have a different scenario because just today we've seen global markets surge, but we saw our markets open marginally higher and then trade deep in the red. So, your thoughts on how Trump 2.0 will impact global markets at large and certain sectors at large?
So clearly, Sakshi, the way we see this as far as global, if I look at pockets, right, today, China is one example, one pocket, right? Then there is Europe, then there is, North America, or I would say, basically North America and the West. Now, clearly, Trump 2.0 says, and he's mentioned that, I'm going to bring in, as I told you, tariffs to Mexico and Canada as on 1st of February. In Europe, he's saying that we need to look at a more detailed approach to see if I can bring in import tariffs, right? And on the condition that if he brings in import tariffs, it has to be a quid pro quo. He'll remove or he will not impose tariffs if they take oil, for example, from him. I mean, he's already said that in his speech, his maiden speech, in Trump 2.0. So at this stage, given the fact that if all of this happens, and if there is a hope of to say that Trump has left that hope of negotiation with a lot of these economies to say that if we are open to discussion, then we can there is a method that we can work out which will benefit both worlds, the US and global economies. And if that works, and therefore that could be possibly one of the reasons why to say that, look, he's not come out all out and said, I'm not looking at anything else. I'm going to only impose tariffs. He's saying, look, if there's a quid pro quo status, if you're looking at, exporting to me and I'm importing, I could or possibly have a discussion. I'm willing to have a discussion. He's left that space open for discussion, and that possibly could be one of the reasons why he's, the markets may have reacted positively to the US. I mean, and globally. Number two, in the same line, I think he's mentioned and spoken about an external process of recovery, of collection of fees for importing for countries who import to the US. So as I said to you, he's intentionally made out his point to say that, listen, I need to protect the US economy, both from a import perspective and from my dollar depreciation, make sure the dollar remains strengthened. He has a huge challenge on his hands as of now, Sakshi, as we all know, this $36 trillion. Then there's the debt ceiling that comes in again, which is coming up in the next few days. So a lot of this, along with the fact that he is making very conscious statements and very careful statements, I would say, and is leaving that room for negotiation with economies to say that, listen, I'm willing to go to negotiate with you if you also come and do a quid pro quo and take this forward. So that could positively be one of the reasons why global markets may have responded well, or maybe responding well.
Right. Right. So a lot of things in wait and watch mode, as you were explaining, but of course, the spotlight on Donald Trump's decisions and announcements in the days to come. Thank you so much for joining us and for sharing your thoughts.